What this latest decision by MAS to grant digital banking licenses entails. The digital bank licenses will allow entities such as non-bank players to conduct digital banking businesses in Singapore. This new digital bank licenses is a new accolade in Singapore's banking liberalization journey towards freedom and lesser restrictions for the benefit of both customers and providers. This also ensures that Singapore's banking sector is more resilient, competitive, and vibrant. A digital full bank will be allowed to take deposits from and provide banking services to retail and non-retail customer segments. A digital wholesale bank will be allowed to take deposits from and provide banking services to SMEs and other non-retail customer segments. No more than 2 licenses for a digital full bank and up to 3 for a wholesale digital bank. Digital full banks are subject to the same regulatory requirements as existing banks, including rules relating to technology risk, money laundering, and terrorism financing. MAS said that among the key assessment criteria are the value proposition of the applicant's business model, its ability to manage a prudent and sustainable digital banking business, as well as growth prospects. Announced today that it will issue up to 5 new digital bank licenses. This in addition to any digital banks that the Singapore banking groups may also establish under the existing internet banking framework introduced in 2000, and extends digital bank licenses to non-bank players. What makes a bank a digital bank is when the bank has very less or no offline banking and does most of everything online. A digital bank is a virtual bank that does not have a physical presence and delivers products and services online through mobile platforms. Digital banking contains a full transformation to a digital environment, front end and back end, and anything in between, for both customers and employees, and relies on big data, analytics, and embracing all new technologies to improve the customer's experience. Moving on to point 2, outline the problem that you think MAS is trying to solve by issuing up to 5 digital banking licenses. The problem is that the Singapore banking industry is currently not branched out, and by issuing up to 5 digital banking licenses, MAS is trying to solve the issue by diversifying the market and cater to underserved segments of the market more in depth, as they will specialize in that one market. Application for digital full bank licenses is open to companies headquartered in Singapore and controlled by Singaporeans. Foreign companies are eligible for these full bank licenses if they form a joint venture with a Singapore company. And the joint venture meets the headquarter and control requirements. Application for digital wholesale bank licenses is open to all companies. As with the issue of 5 digital bank licenses, the entry of new digital players will add diversity and will help Singapore's banking system in digital economy of the future, with stronger using innovative business models and strong digital capabilities. And this allows market players to cater to specific underserved segments of the market. This is due to the 5 new digital bank licenses, which comprise of 2 digital full bank licenses and 3 digital wholesale bank licenses. Moving on to point 3, MAS specified that the organisation that applies for a digital banking license must demonstrate a sustainable digital banking model. A sustainable digital banking business model means firstly, there is value proposition of the applicant's business model. It has to show that the model integrates the innovative use of technology to serve customer needs and reach underserved segments of the Singapore market that will differentiate them from existing banks. MAS will also consider the ability of the applicant to implement the proposal. This is to ensure that the banks are not repetitive and are more innovative and more digital than previous bank models. Secondly, the ability to manage a prudent and sustainable digital banking business. This includes the level of understanding of key risks in a banking business, ensuring of its regulatory compliance and risk management plans to avoid any unnecessary risks or minimize the impact of unforeseen disasters. MAS will also consider the reputation, track record, financial strength, and commitment of the applicant shareholders. Finally, growth prospects and other contributions to Singapore's financial centre, such as the jobs it will be bringing back to Singapore. This is to help the future generation of finance people in Singapore. Its commitment to develop the skills of the local workforce to increase the market potential of Singapore. The capabilities it will be located in Singapore, the headquarter functions it will be anchoring here, as well as its regional expansion plans for the better of Singapore's market economy. Such a company with the sustainable digital banking business model is uniquely suited to address the issue to serve underserved market. as the value proposition in the applicant's business model integrates the use of technology to reach underserved segments of the market, which will differentiate them from other banks who previously was unable to reach those underserved markets such as foreign workers, small and medium-sized enterprises. Digital banks can offer a variety of financial services to foreign workers who make up one of the most underbanked and underserved segments in the market in Singapore, as they see little value in opening a bank account. Foreign workers can be served by giving them insurance or come up with an idea to help them save, as remittance companies already know how much a foreign worker remits and spends a week, as most foreign workers receive their income then spend and remit overseas. Meanwhile, SMEs tend to have difficulty acquiring loans, as they are generally deemed more risky due to a lack of history and poor financial banking among others. Hence, digital banking and the use of innovative technology can break away from conventional banking norms with often form filling and cumbersome processes, and deliver loans faster and cheaper. For example, in China, WeBank by internet giant Tencent and Alibaba-backed MyBank focus on lending SMEs using credit data from the e-commerce giants Alipay product to conduct analysis for loans requested by small businesses. This reduces the time needed to measure credit risk. Moving on, the possible implications if a digital bank does not possess a sustainable digital banking business model. If the bank does not possess a sustainable digital banking business model, means the bank does not have a good value proposition of the applicant's business model, and there might not be the innovative use of technology to serve customer needs. Hence, they cannot really reach underserved segments of the market. Hence, the new issue of digital banking license cannot solve the issue that was brought up in point 2 of tapping into the potential of underserved segment of the market, such as the two biggest underserved markets in Singapore, which is foreign workers and SMEs, as mentioned previously. Another factor the bank does not have if they do not have a sustainable digital banking business model is the ability to manage a prudent and sustainable digital banking business. Hence, they do not have the understanding of key risks in a banking business and have no to little strength in their regulatory compliance and risk management plan. Hence, they are not immune to risk. Hence, in other words, they are very risky. Moving on to point 4, discuss the advantages and disadvantages that digital banking presents to both the bank and the client. The advantages of digital banking to the client is that an online account is simple to open and easy to operate. It is convenient for clients, as they can easily pay their bills and transfer funds between accounts from nearly anywhere in the world. You do not have to stand in a queue to pay off your bills. Also, you do not have to keep receipts of your bills, as you cannot easily view your transactions. It is available all the time. Clients can perform their tasks from anywhere and at any time, even at night or on holidays when the bank is closed. The only thing you have to have is an active internet connection. It is fast and efficient. Funds get transferred from one account to others very fast. You can also manage several accounts easily through internet banking. You can keep an eye on your transactions and account balance all the time. You can get to know about any fraudulent activity or threat to your account before it can pose any severe damage. It's a great medium for the banks to endorse their products and services. Digital banking also provides online services, include loans and investment options. Most online bank offers a free online checking account with no deposit, along with other no-fee bank accounts such as IRAS. In addition to offering low fees, online banks often have the best interest rate. Whether you are looking for a certificate of deposit, a high-yield checking account, or deposit accounts with high interest, such as a money market account. The disadvantage of digital banking to a client is that understanding the usage of internet banking may be difficult at first. You cannot have access to online banking if you don't have an internet connection. Security of transactions is a big issue. Your account might get hacked by unauthorized people over the internet. Password security is a must, otherwise your account may be misused. Your banking information may be spread out on several devices, making it more at risk. If the bank server is down, then you cannot access your accounts. You might get overly marketed by the bank, and it may become annoying. It is inconvenient to make deposits, even though a bank purpose is to gather profit through attracting assets. It is very hard for online banking to do so, as you cannot simply drop off cash or a check at a local branch. The advantages of digital banking to the bank is online banks don't have to pay for things like electricity, janitor services, landscaping, or rent, so they can pass those savings along to customers. Meanwhile, the disadvantages of digital banking to the bank is that online banking is somehow limited to the connection of internet in a way. If there is a power outage or if servers are down, clients will not have access to their account, and therefore banks might be overwhelmed by customers' phone calls if there is no online access. But with a real bank, you can always find someone to talk to in the branch. There is lack of security. Customers may not feel secure with a bank that does not have a physical presence. There is also risk of identity theft, actual theft through hacking or stolen passwords. Online banks cannot offer certain types of services which are important financial transactions without real-world presence or requiring an in-person visit, such as buying a home. Moving on to point 5, how MAS issuance of digital banking license might influence the new and long-term futures of the financial services industry in Singapore. As previously mentioned, digital full bank license will allow licensees to provide a wide range of financial services and take deposits from retail customers. A digital wholesale bank license will allow licensees to serve SMEs and other non-retail segments. Hence, this allows the digital banks to expand their market and reach underserved markets like SMEs to reach higher potential and tap into markets that were previously not utilized on. Also, due to the issuance of the digital banking license, it will create digital-only banks with non-bank origins, which will offer value as banking systems need strong anchor players. As the other objective of this issuance is to create greater competition among the banks, which will encourage greater innovation in finance, together with retaining strong local players and trust in the banking system that have guided Singapore's past liberalisation initiatives in banking. For example, Grab has confirmed that they are studying the new license and are considering working with suitable partners. Along with Razer, a company that specializes in making gaming accessories and implements the mobile wallet scheme, is also another huge non-bank company that is considering applying for the digital banking license. Hence, in the short run, it will attract customers due to innovativeness, but people will stop getting amused once it becomes a norm in our everyday life. But in relation to Singapore's competitor Hong Kong, even though as some might argue that MAS issuance of a digital banking license is just playing catch up to the digital banking trend of other countries like Hong Kong, the difference between Hong Kong Monetary Authority and MAS is that Hong Kong Monetary Authority issuance of digital banking license is that it is very limited and is only given out to big companies, with the recent batch of 4 given to entities like China's top technology companies including Ping An, Ant Financial and Tencent. But MAS will not limit their issuance of digital banking license if they meet the requirements, and is happy to encourage more new competitors into the market to influence more innovativeness in banking products, which will benefit the customers greatly. And Singapore's banking industry will be affected in the long run for the customers, as this will improve their banking experience in the future, and also Singapore will be more digital in terms of banking industry compared to other countries worldwide. Moving on to point 6, value disruptive competition. It is a disruptive competition that forces several producers out of the market. It usually occurs when there are so many producers or product that prices are driven down to the point where no one makes a profit. It is harmful for the finance landscape at large if a bank were to gain market share through value disruptive competition, as it will not be fair to smaller regional businesses, as they cannot control the value market of the banking products due to big dominant local players like DBS Bank, United Overseas Bank and OCBC Bank. Hence, this means that there will be cutting off competition and new competitors cannot enter the market. Hence, MAS motive for the issuance of digital banking licenses will be pointless, as one of its reasons is to widen up the competition in the banking industry to allow more innovativeness in the service and product to improve customers' banking experience. As banks will get competitive and wants to be the top bank among all the competition that was built up due to the issuance of digital banking licenses. But all of it would be pointless if a bank were to gain market share through value disruptive competition, as this would mean that customers' banking experience will not improve due to lack of competition spirit in the banking industry, and the Singapore banking industry will not improve compared to other global banks around the world, as there is no initiative for innovativeness. Thank you.